Okay, this is what we have. We have Euro NZD weekly time frame. So if you get to look at this level here, you can see we have a high here, and then we have a higher high. And then if you look on this low here, we have a low and we have a lower low. So this structure qualifies to be a QML. So this level here, it's gonna be our QML level here. And if you look at here, we have a fair value gap above this level of our QML here. And then if you look at here, we also have another fair value gap here. And then if you look at here, we have this low here, this previously broken low here. You can see price broke it. But if you look close, let me just show you. If you pull this like this, and then you draw something like this, you get to see that this is actually a breaker structure within the QML structure. So if you look at this, you can see we have a breaker structure within the QML. So what we're gonna be looking for at this level here, so this is the level of our breaker here. When price get to this level here, we're gonna be looking for sell profiles at this level 1.65. But I believe price will push up a little bit to get to this level here, just to close this fair value gap completely. So from this level here, we're going to be looking for sell profiles to sell at this level here. So as a result, when price get to this level here, what we're going to be anticipating for, it's a decline in price, and that decline in price will leave a high at this level here. So there is going to be a new high being formed here as price is going down. And according to the concept of QML, we call that high an FTR. So let me just put FTR. So FTR simply stands for failure to return. So it simply stands for failure to return. So the reason it's an FTR is because it failed to return to this level of our QML. So as price was going up, we were anticipating that price will get to this level of our QML. But all of a sudden it gets to fail to get to this level. So that's why we call it an FTR, because it failed to return to this level of our QML here. So but now we have the reason why it failed. It's because we have a breaker structure at this level here. So you're going to be anticipating for a sell at this level here. You're going to be anticipating for a sell at this level here. And you're also going to be anticipating for a sell at this level here. So instead of you just waiting for price to get to this level here, and as you are waiting, all of a sudden you get to see price failing to get to that level, and you really don't understand why price is actually failing to get to your level, because many are not familiar with the breaker structure. They only know the QML structure. So this is why it's very important to also know the breaker structure. So as price get to this level and decline, you're gonna sell short here, and then also you will be waiting for a retracement for price to pull back and get to this level here. But there is something interesting at this level here. If you look at this level, you can see that we have a fair value gap here, okay? But at the same time, while we have a fair value gap, we have an order block at this level here. So we have an order block at this level here. So we have an order block at this level here. This is one of the reasons I say only focus on QML with that lines up with order block, because they have high probability. So I believe we're gonna see a pullback after that, and price get to this level here. And then price get to this level here, it's gonna go up a little bit, I believe, just to close in this fair value gap here and touch this order block. And then we get to see a significant decline in price from this level here. So this is the level here where we anticipate to see a significant decline here. Here we can say it's just gonna be a retracement and just closing all this fair value gap here. But the real massive move that we're gonna be anticipating, it's at this level here, at this level of our order block, lining up with our QML and also with our fair value gap that we have here. So as for your stop loss, you can put your stop loss, I believe, above this high here, or you can just wait for price to get to this level, and then price get to this level here, you go on a smaller time frame, you look for sell profiles. Okay, so when you get the sell profiles in a smaller time frame, you can put your stop loss on whatever high that you have on that smaller time frame, based on the type of sell profiles that you're gonna find on that smaller time frame. So that's it for this video. Shalom. Okay, I forgot to mention something. If you also look at this level here, so if you look at this level here, let me just make this straight. So if you look at this level, you can see that we also have a fair value gap here. But why are we actually not paying attention to this fair value gap here? Because it doesn't line up with anything here. That's why I'm not paying attention to it. So I'm only paying attention to this fair value gap here because it lines up with an order block. Okay, so I believe price will push up a little bit just to get to this level of our order block here and this fair value gap here. It might not get to this level of our fair value gap, it's okay, but I believe price will definitely get to this level of our order block here, which is why it's safe to put your stop loss here. If you're gonna put your limits, put your stop loss above this high 5 to 10 pips away. But if you're just gonna wait for price to get to this level, you're going to be looking for sell profiles at this level here. And when we talk about sell profiles, we are talking about first test of an order block, or an order block that will be formed within a smaller time frame, and then you take advantage of the first test, or it's going to be a mitigation, or it's going to be a breaker within that time frame that you're going to be looking at, which is a smaller time frame from this one. So that's it. I just wanted to clarify why I didn't even pay attention to this fair value gap here.